What's going on? Happy Sunday, everybody. Happy spring forward. Give folks just a quick moment to come on in. If you're rewatching this, welcome. You're welcome to skip ahead just a little bit, but we typically give roughly around a 5-minute buffer or so. I'm not going to wait that long this time because I want to get straight to the value, but it's going on Sherry. If you're seeing this live or if you're tuning in or you're having to rewatch it later in the evening, because now we got spring forward, so people are going to be outside a little bit longer now that we have more daylight, right? So if you slept in a little bit, if you enjoyed the day wherever you are in the world, in the United States, hope you had an amazing weekend and Sunday. Don't forget, the link is down below in the chat right here. And also you're welcome to message Instagram, Twitter, or X. You're welcome to message there for our link for our Edge boot camp. It's our 2-day boot camp. I know people get a little intimidated by boot camps and all these things. Like, golly, can I commit to this? I want to make sure that people are aware that I always make everything as beginner friendly as possible, but also as extensive as possible. So this is for a beginner, intermediate, and or advanced, but this is a time for people to kind of come in and get like a streamlined flow of how to trade options, what the overall stock market is, language, so fundamentals versus technicals, and then futures trading as well, which is going to be on Sunday. We will be sending out the official schedule this week. As far as timing, it will be in the early afternoon, so give people time to wake up in the morning, come in. Roughly about 2 90-minute sessions, okay? So if you can commit for 2 90-minute sessions, you will get the recordings as well. So today is the last day to take advantage of that founder's rate, okay? I know people do that all the time, been coaching in business for a while, and folks are like, oh, yeah, the rate will go up. It's always a thing. It's like, yeah, it will. Just saying. So just make sure you take advantage of that if you're on the fence. If you have any questions, tonight will be the night to ask them. Tonight will be the night to go ahead and lock that in. And as I always do, as some of you know, and for those that don't, anytime I offer something, I try to offer more value than what is presented. So giving up potentially more time, asking more questions, maybe throwing in bonuses. Typically for my boot camps, I typically do a one-on-one call with people who join. So roughly about a 30-45 minute one-on-one call. So I know a lot of people are like groups and things, like if you've ever wanted someone to help you set up stuff, all those things. Is it worth getting that trading on chart feature on Tradeovate? And could you possibly show some of the most important features on there? Yeah, I can definitely do that. This one is going to be a little bit short, but I can definitely do that. As far as tonight, right? I want to focus on what's going on tonight. I'll jump into the futures as well throughout the week. So if you can just give me a little bit of time with that, I just want to make sure. But I want to go through it today. And the reason why I have to rush off today, I've got a meeting this afternoon, pretty important there. So I just want to make sure that I will get in here, give you the value, and get up out of here and then talk to everyone in the Discord. Is that okay, Brother B? Is that okay? So I don't want to feel like this one's rushed, but this one can't stay on too long. So got a meeting, which is crazy for people like, you got a meeting on Sunday evening? Yeah, it's only 4 o'clock here. So got to take care of. So definitely can do that. Yep. Are you on Take Profit Trader or do you trade a different, before we get started here, Brother B? Are you on Take Profit Trader or do you have a different, you know what I mean? Different prop firm that you're part of that you're just using Tradeovate for. So unfortunately, I won't be able to live trade tonight. I know people are like, man, there's so much going on in the futures market. Yeah, I know. So I won't be able to live trade tonight on here, but just letting y'all know. All right. I think everybody is tuning in here. Not just Tradeovate right now for futures. Okay, cool. So you got your own money inside of Tradeovate and you're trading futures within your own brokerage or your own money. Okay, I got you. All right. Cool. Let's jump into it today, everybody. Hopefully y'all are doing well. If you give me that like button, subscribe, all those good things. Let me know down below where you're tuning in from. And I want to get down to the questions and the value and all the important things that we need to know this week. And I'm going to also address some things that are not too fun, which are how this market has been. Right? It has just not been ideal. I feel like my community has felt it a little bit. Anyone in Leverage University, but for day ones or anyone who is a part of the community, you know that I don't stray from nothing. Okay. These are just the times that are built strong. These are the times where people step up and actually gain value from what's actually going on. So, all right, let's jump into it. That's enough of me talking here. I'm going to welcome everyone officially to our Stock Sermon Sunday. As far as the agenda for tonight, we're going to talk about the oil increasing and why that is indicative of potential correction for the overall market. Now, as we know, things don't go straight down. This market has been very volatile entering into 2026, and we're only 2 months in and some change. So what does that mean for this week? Just to be straight up with you, it could be completely wiped as far as what I'm saying right now. Okay. So we have to be flexible. You have to be nimble. You have to understand that what anyone is going to be saying on these YouTube streets are going to be up for changes, flexibility. Hey, we're back up, but yet the video said we were going down. Hey, we're going down, but yet, okay, we're coming into support. Do we buy it right now? It's going to be very, very volatile going back and forth. But I think last week and the end of last week kind of really gave us a sentiment that, okay, we thought we were going higher because remember those couple of green days that we had, but we popped down even lower. And I told you guys, or I don't like to use that term, but I warned or just gave you the information, right, about Bitcoin, all right, popping into 74 and 75,000. And where is it back again? That was just a quick little pump fake, short squeeze, and we're right back down to 65 and 64,000. So nothing has changed in our downward trajectory, all right? So have any questions that you're wanting to ask down below? Anything that you would like to know? And we'll go from there, all right? Let's jump into it. Thank y'all so much for being here. I appreciate you. And let's jump into the economic data for this week. So I have our Discord up here, and I put it inside of our economic calendar. And we've got nothing on the docket for tomorrow, okay? Nothing on the docket. And I wrote some things down in my journal for trading this week and from last week is that Mondays, I really got to treat it as just a watching day. And because I do live trade with my community Monday through Friday, I'm going to have to communicate with them, and y'all probably already felt it if you're already in there, that it's okay to just sit and watch for a little bit, right? It's not exciting when you're in a community or you're wanting to make money every single day. I get that. But as you get more disciplined in this skill set and trading more specifically, right, it is still valuable to watch. So that means you might be sitting in front of a screen with a group or by yourself for 30 minutes, an hour, just kind of, chopping it up, talking, hey, what are we going to look at today? And you're not taking a trade. Okay. Now that does not mean there's not money out there to be made, but I think it kind of goes astray sometimes when you have traders that become very disciplined, meaning that they don't take a trade, that, hey, I didn't see anything that I liked. Like those types of terminologies are not the sexy thing because we're all in here trying to make money and you're trying to look for the person to kind of gravitate towards and which one is making the most money so I can gravitate towards them. I want you to understand that as you gain more experience in this game, you will know the best times to push the envelope and the times to just, me and James inside of our community, he's one of our moderators, and James has been awesome as part of Leverage University. We have this rolling joke in the community now. Hey, you text me and let me know, and you let me know when we choose a direction in this market, right? It's very difficult to do that, but that's when people step away, right? As far as kind of, I guess I'm not going to look at anything because Dr. B or people are just like, this isn't a good market. That does not mean don't show up, right? So what that means is on Monday, I might just tomorrow, instead of live trading, I might see if there's some opportunities. But yet again, a lot of the moves are happening before we can even get into the move. So we already gapped down this morning, right? And you saw the action on Friday. A lot of people got chopped up, right? It didn't go really higher. It kind of closed off at the end of the day. And I'll show you that on the charts. And then On Monday, are we going to sell off more, or is it going to be a short squeeze right back up? It's kind of just a crapshoot at this point, right? But we can make money, but also we can protect our capital by just watching, right? So Monday, going to be very open-minded in the morning to see where we go. Do we recover overnight again? Tuesday, existing home sales, 10 a.m. data right there. Wednesday, we got consumer price index. This is going to be the big, massive day here, very similar to NFP that we saw on Friday morning. CPI, go watch my video here on the channel around economic reports. CPI is one of those top 5 economic reports, our our consumer price index. Okay. Now, on Thursday, we have jobless claims as always. A couple other data reports here, housing reports, and then we've got GDP, PCE, just job openings. The job data from NFP was absolutely horrendous. Okay. So this is going to be very interesting, of another week of up, down, in between, sideways, going down further, catching moves, getting opportunities, right, for trading. Now, if you were to ask me and we were to end this stream right now, let me make sure all this stuff is still good. Okay, we're still good. All right. If you were to ask me, hey, Dr. B, what should I do during this time? All right. There are 2 ways and 2 opportunities, in my opinion, as far as trading goes. Okay. Trading, if you are interested in scalping, which is what I'm going to be talking about in the boot camp and all those good things, different styles in different seasons. Okay. And each one is profitable. So scalping right now, meaning you're in and out of a trade very quickly within 5 minutes, 10 minutes, 15 minutes. Maybe it doesn't make a big move and you got to get out, and then you wonder, hey, can it go more? It's in and out within 15, max 20, 30 minutes, if that. Okay. Sometimes it's less than 5 minutes. So scalping is really good right now in the market. Second is simply waiting for the extreme correction. I'm talking about 10% from the most recent highs. Potentially that corrective move, if you go back in your charts, if you're a complete beginner and I'm talking to someone that has no idea, they're just tuning in here and you don't look at charts, when you start seeing the fear and greed index get into extreme fear, okay, type in fear and greed index inside of your CNN or just Google it, fear and greed index in the stock market. When that thing or meter gets into extreme fear, that's the time where we want to start buying very, very heavily. It does not mean don't nibble and don't buy right now, not financial advice. It does not mean don't get your swing calls and things of that nature. It just means that that is potentially a better opportunity within the next couple of weeks. By the end of this month, it could be right now. We don't know, right? But I know that I want more than 10% from the most recent highs. And we'll talk about that when we jump on the charts in just a second. All right. So those are 2 ways that I think are very valuable right now, because I have a lot of questions that come in my DMs and inside of our community. Hey, should we jump into big leaps right now? And yeah, you can, depending on what you're looking at, but you've got to be comfortable with the volatility that Oracle can go up to 155 and then come all the way back down to 130. Right. And you're in a leap. So you have to be comfortable with that volatility to say, I've got a year plus on it and I'm going to have my stop loss, or I'm going to have a trade plan for this trade. Just because you have more time on a contract does not mean that contract is quote unquote safe. You still have to have a trade plan for that particular contract. Does that make sense for everybody? So just because something is extremely down does not mean it can't go down more. Right. So that's why we're trying to see, hey, is this a true bottom? Because if I keep telling folks, I don't think so, personally, just my opinion. I think it's a dollar cost averaging space. It means turn on your recurring buys, start dollar cost averaging, but we have not corrected 10% from SPY, QQQ, or IWM just yet from the all-time highs. All right, just my opinion. All right. Now for long-term investors, I said I would give another way that you can participate in this market. And let me pull myself back up on the big screen really quick before I share my charts. If you're a long-term investor, which most people are, everyone should be, or you're trying to become one, that means you want to buy and hold shares of stock. This is the time where you have to do your due diligence, and I'm going to help folks do that here on this channel and also inside of our community, saying, how do I do my due diligence on a company? Because the question now is, do I load up on Lyft? Well, Lyft has questions right now. If Tesla becomes the it factor, meaning they come out with their autonomous cars, and Tesla's been very quiet right now. Elon's been very quiet. If they come out with those autonomous cars, what does that do for Lyft and Uber? So just because Lyft is at $13 does not mean it can't come down underneath 10. So you have to do a little bit more due diligence to say, okay, where's my buy zone and then where's my target if I want to buy something like a Lyft? This is just an example, right? So we're looking for companies that can sustain AI. We're looking for competitive moat companies, MOAT, companies that have that free cash flow, that have the resources to make it through a potential recession, that have competitive edges between their competitors to say, okay, can this company get acquired by another company? Do I need to just invest in the big boy of just saying, hey, I'm just going to invest in a Tesla. Hey, I'm just going to diversify over here in a software company such as Microsoft. Oracle, I think, is still a great value. And then have a couple of speculatives, right? So this is the time, in my opinion, that quote unquote, as we say in the space, are real investors, or like what is truly going to last, right? So we have to do that due diligence a little bit more than just saying buy the dip on whatever. Does that make sense? Can I get a 1 in the chat? Does that make sense for everybody? I just had to address that because when you get questions like, hey, is this a good buy? I'm like, that's a loaded question. I think your blue chip companies are great buys at all times. Microsoft, Apple, Google, S&P 500, the small cap companies. But if you're asking for things that are outside of that realm right now, it has to be kind of this wide range, right? This wide range of, hey, I have to do more due diligence? I might have to ask some AI agents. I might have to be in a community and ask, and we collaborate and get ideas. All right. So just my opinion. All right. That's enough. Let's jump into the charts. So Brian, you're doing a lot of talking, but can you give me like specifics? Yeah, I can always do that. All right. So let's jump into SPY here. You can see that we're gapping down here on the charts. Let me clean up the charts here for everybody. So if you have a specific company that you're thinking about, because people don't like vagueness, right? I go from very macro to micro. That is my teaching style. Broad, big picture view. And then we dial it in to say, okay, what is the thing within that I want to buy? What is the thing within that? What's my goal and objective? Right? So if we jump on a monthly chart, which we're entering into a new month of March, it's March 8th right now. And this is our monthly candle here. Okay. Now I want you to look at back again. I know I'm repeating myself from last week, but we may have some new listeners and watchers. If I look at this candle here and I look at last March and April, that's last March and April. That's how the month of March started right there. Okay. So we are officially on a monthly chart forming lower highs. All right. That is why you're hearing that this week might be that week, because we officially on a monthly chart broke a new low underneath this 675 from the last monthly candle. Okay. So what's the next clearance level for us to finally kind of get out of this mess? Okay. We finally broke through this channel. Okay. Finally broke through that channel. You can see the channel, the 5-month channel that we've technically been in since October of last year. We finally kind of got out of that, peeking out of it. And then this week, what we want to see is a continuation underneath 668. I'm just going to round it down a little bit. 668. We want to see that underneath 668, ideally. Now, are we already underneath that? Because it's not showing me the after hours here. SPY. Okay, we're sitting at 671. Okay, at least for right now on SPY. And the futures are down. They gap down a little bit. So, okay. So we got to get back underneath that, because you can see if we continue to hold this 670 like it did on Friday, and we reclaim back above this 675 and get back into this range again, then we're chopping again. Okay. So if you look at the monthly, that monthly is telling us that we're in a downtrend. Okay. So what does that mean, Dr. B? That means that you either can have two choices. Like I said, you can either scalp it back to the upside. I mean, you can take little calls back to the upside. That's fine. Like day one, it calls back up. Day two puts back down. Day three calls back up. But I want to keep the bigger picture in mind, at least for me. That's why every green day, I'm like, I'm about to short it. So I might have to take an either a hands-free approach on a green day and be like, okay, it's a green day, whatever. But these monthly candles are still telling me that this is in a downtrend. That's why you're seeing those short pops, shorted, short pops, shorted. But the range is so wide intraday, right? So the day looks so crazy when you get a big green candle that goes all the way back up to 685. And you're like, oh my gosh, that's a buy the dip. But you got to zoom out a little bit and we're still forming lower highs, right? It's crazy. So this week on SPY, keep that 675 on your watch here. The 675, you can see it if I zoom out. 675, 675, 675, 675, 675. And you can see what we were rejecting towards that Friday close. Okay, 675. All right. So we either break down underneath this 668 and get underneath it and continue. All right. And it continues to gap down and continues to go. Or we get some crazy bounce right back up. Okay. And all that's going to be indicative of that data that I just showed you and the overall war that's still going on, and also a potential still partial government shutdown. So if you were to ask me again, we're in support. Okay. So if we're in support, I still got to be careful about what happened here at 669. You see taking it down. It's like, man, break the new lows and then bam, right back up. And then we didn't continue, and then we chopped right back down. Okay. So I'm really in this season, and this is the trade that we called on Friday, at least the community saw me catch it in futures, is a previous day lows, previous day highs. That's really what I'm watching at this point. So we rejected that previous day low. This black area here was the Thursday low, and that's where we were rejected. So if we get underneath this low right here, then we will continue down further. All right. If we bounce back up and we reclaim Thursday's low, then we're probably going to go back all the way to that 683 and 680 mark. All right. So let me check on gaps. And this is the time to throw any questions in for anyone. We do have a gap right there, as you can see. So that gap, as always, will probably get filled. So I think personally we could hold and it could trap shorts down here, and then we squeeze back up and fill that gap potentially. So we shall see this week what we have in store. Keep your head on a swivel, as I like to say, and we'll go from there. All right. So I'm watching these lower highs that are presenting here. And if I draw those lower highs, it's kind of, I'm not a big fan of trend lines, but if I draw those lower highs, we could pop all the way back up into 684 and still reject, which seems crazy because that's another $10, $12 move on SPY back to the upside, right? So 675, that's your mark. QQQ. All right, still holding up fairly well. Big tech, as you can see, did not really break underneath. If I go to a monthly candle, did not close red lower on that month. So I really just want to watch the previous month's candle, which is this February candle here, underneath this really 589. I kind of want to see it clear. I've been wanting more clearance of the level because it's been trapping levels at the top and trapping levels at the bottom. As you can see, it got underneath and then ripped right back up. Okay. So you almost want it underneath that 589 or either just waiting underneath 580, right? Underneath 589 or waiting underneath 580, because this whole zone right here has got some buyers kind of maybe potentially stacked up in that zone. All right. So 592 is going to be your mark this week. And we're just consolidating underneath. As I stated previously, if you come here frequently, your mark is going to be the daily moving averages. All right. So this is how I get my sentiment. All right. So if you haven't watched that video or you're completely new and want to learn everything, I got to say it again, that boot camp is going to be pretty nice for people to have a straightforward level of everything that you hear on the channel. And some people are like that. They're like, I don't know where to start. I know you have all the videos on the channel, but I have no idea. I'm more of a hands-on type of person learning. All right. So these moving averages here are how I'm getting my sentiment. As long as it's underneath these moving average stacks, there's the daily 50, that lime green line, the daily 20 right there. You can see we're rejected right underneath that 607. And then where is it headed? Ideally, potentially down to the next moving average. Okay. So you got this range here that you're pretty much playing in between, which is pretty wide. All right. That's what makes this tough. And I'm not going to sugarcoat it. That's what makes this tough, is that we're in support, but you also are hesitant to jump into calls potentially because we could just tumble and you don't want to trade against the trend. But then when it pops, you're like, man, should I switch the calls? But then we get to the resistance and you may be asking yourself, dang, like, what if it rips? I don't want to get into puts. And then it just goes right back down. That's why I look at the bigger time frame to give me a better sentiment to say, we're still forming lower highs, lower highs, lower highs, and we're trying to form new lower lows. Can I get a 5 in the chat for everybody? Does that make sense for QQQ? 5s in the chat, right? Whether it's, and maybe give me feedback as well. Maybe give me a 6 if you're like, Brian, that's too much. I'm confused. You can be honest. Give me a 5 if you understand why I'm saying all this. So you have a very holistic view if you can type. If you can't type, I definitely understand. I'll keep going. Because when you show up in the week and you're by yourself and you're trading on your own, I want you in the back of your mind saying, he said the bigger trend is down. So if I'm going to trade it back up with call options or buys in futures, I need to know exactly where it's going. Right? I need to figure out where the target is, because if I'm going to trade against all that downward pressure, I need to know where I'm going. Right? Because if we think about it, the age-old trading methodology, and for those that have been a part of my community or been like listening to me talk publicly about trading since 2022, it used to be, Megan, you remember, buy calls and, we're just going to go up. Hey, buy puts and we should continue down. Right? Just hold it all day. Buy a call, hold it all day. Buy a put, hold it all day. Swing it into the next day, maybe. And now it's like every day is a new mindset shift, right? Which is, I think I told y'all in the community for a while, and maybe you heard me say it here on YouTube, those that start trading or looking at the stock market this year or started last year or over the last couple of years, if you were actively in the markets this year, it will be one of the most transformational times, in my opinion, for you, because if you can survive this type of nonsense and up and down and straight up and then straight back down and then sideways for a little bit for 5 months and then it just drops and then you're like, do I pick up the dip? And it raises. Like, if you can survive that, you'll be set for life. And I'm talking about more so new individuals that have been actively. I'm not talking about my long-term investors. Like, I've had Apple since 1980. That's easy. Buy the dip and hold. That's what everyone should be doing. But if you want to learn the stock market as far as why it went up, why it goes down, why it's so sideways, what are these economic reports? When do I buy? When do I sell? Right? Then I think this is going to be one of the most transformational years. That's why I'm pushing it so much for people to learn it, and why I'm pressing so much to teach it in the way that I do. Kind of going above and beyond in my opinion, what I should, but that's just my nature. All right. Everyone good on QQQ? We got levels there. All right. Now, IWM, I told everyone, if you're taking notes on IWM is kind of our risk on assessor. When the small caps are doing well, when the mid and small cap companies, and if you don't know, go look at IWM holdings, all of the MPs, the AI stocks, the speculative stocks, the up-and-coming companies, the companies that don't have a lot of free cash flow, they have a lot of debt, they're on the piggybacks of other big companies. When those companies are doing well and the IWM is going up, right, then the overall market is saying, hey, everything's good. But when you start seeing the IWM kind of turn over and get a little bit more aggressive to the downside, that's kind of more of a signal of what we call a risk off environment. Okay. Once you look here in 2025, going into the year when IWM started breaking underneath this weekly moving average stack, underneath it, underneath it, underneath it, and we're approaching the first break right here. Okay. Does not mean it can't rebound, because some of you are like, well, Brian, there's still an uptrend. What about that? Yeah, I see it. Right. But I'm also looking at the candle structure and candle location. You'll hear traders, investors talking about the structure of the candle and where it's also located. That candle has a heavy top wick with a heavy bottom body. Lower wick is barely there, which tells me that buyers aren't heavily there, and we could continue to break underneath the new low. Follow through candles should start looking like that. Get me? So that to me tells a little bit of a sign that, again, it's difficult for me to say each and every time when I come on these lives and then the week starts like, man, I just told them on Sunday that, and then the market opens up super green, right? Brian said Bitcoin was going down to 50 and whatever, and he said it was going down, but it's popping, it's going above 70. I have to stick with my thesis reading the candles, because any pop based off this candle, yeah, it can pop because the volatility is so wide. It can go all the way back up to 263. That's technically still a lower high, and it can still do that. Right. So like that's the sentiment that we're in. Okay. That's why I zoom out to bigger time frames. So IWM, what I would watch this week is just breaking below this 250. Now on the futures, that's RTY 2500. Okay. RTY 2500. So if you watch the futures market alongside of options or the stock market, it will give you a sentiment of those true breaks. So if we see RTY, which are the futures of the IWM or a small cap or Russell 2000, then we can see this continue lower. Now I have a bigger target of IWM potentially down to the next moving average, which will be near 240. Okay. Near 240. But I've got to respect this 250 mark. As you can see, every time we come and make a new lower low, we pop higher back into the channel, pop higher, pop higher. So again, those moving averages really help you to get a sentiment, and it really is moving between the moving averages, right? See here, pops above it, fails the daily 20, gets back below the daily 20, pops all the way back to the daily 50. Then gets the daily 50, rejects the daily 50 all the way down to the 100. Then you can pop all the way back to 260, $10 move there, and then reject all the way back down to the daily 200. Right? So that's why I created that moving average video, and I talk about them so much, because it gives you a sentiment of downward or upward pressure or strength or direction. All right. We're getting fives in the chat. Everyone good? All right. I think everyone's still sticking with me. If at any point you were like, I have no idea what this dude's talking about, he is talking all, these are years of stacking on information. So you're hearing me, for those of you on a public platform, I want to make it as easy as possible on the training videos, the educational videos, right? But when I'm teaching this, I stack on information stacking. So all this is a culmination of stacking from support resistance. Then it goes to moving averages. Then it goes to reading price action and candle structure and location. Then it goes to just reading about buying, keep it simple, buy extreme fear, maybe potentially take some profits at extreme greed. Hey, what's a correction? More than 10%. How do you measure that? Drag it from the most high right here. Pull it back. We're at roughly 8%. So we're almost in corrective phase on IWM. So that would take us down into the mid 240s. But around this zone, this could be a mini correction this week. So just want to make sure, hold in space for people. If y'all didn't know, if y'all have never done it before, if you're a speaker, if you're an educator, if you talk to blank screens and no one's giving feedback and can't hear anybody, no questions, it's difficult. to kind of see everyone through the screen and try to address every question or doubt or what you may be thinking. All right. It's kind of like I'm pulling questions out of your head already. All right. DIA, very weak here. Okay. The Dow Jones are our top US 30 stocks, which are supposed to be technically our, I don't want to say it, but boomer stocks or more stable stocks or anything that they put their money, but individuals or investors typically signal as safe haven stocks. Okay. Typically reside in the Dow. So with the Dow pulling back like this, that also signals a little bit more of, kind of fear in the markets. All right. I'm going to get to the positive, but I just wanted to address all these things. We got the VIX popping above 30, VIX popping above 30. Every time the VIX, our volatility index, gets above that 20 mark, it starts to inject a little bit of fear in the market. Okay. So if I go over here to the VIX to the left, when was that? That was in October, right? When tariffs were going into, the November timeframe, end of October into November, and we had that corrective move. There we go. There's the VIX. There was fear injected into November. Okay. And then now we're having the war. And if we go over to the VIX again from last year at this time, there's March last year, VIX got above this 30 mark, and we went into just a corrective move right there where the VIX went to 60. So you're seeing patterns that are rhyming, right? Which is how you can come to a conclusion to say, okay, I can take my little call scalps, I can dollar cost average, but maybe keep an open mind that we can go even lower, right? So, alrighty, let's jump into a couple of our core stocks here. And what I'll do, since I've been feeling like I've been talking about a bunch of warning signs and negativity, folks don't want to hear that on a Sunday. We're trying to hear some green, some positivity. That's where I wear my green hat. I'm like, we're trying to hear some green. What are some good things? Okay. So let's go into some opportunities here. And I'm going to just go into, we talked about it in a community a little bit. I'm just going to bring up Oracle. Okay. Because I think some of the bigger tech stocks and anything that hasn't pulled back in the software space still has potentially lower to go. Okay. And I do think maybe even Oracle has lower to go. But we were talking about this in the community that I think Oracle could be a really good opportunity. In my buy zone on Oracle, I'm looking at this weekly corrective RSI here. Okay. And this is kind of when I start getting really interested when I see the weekly RSI getting into an oversold level, and I start seeing the potential MACD start curling here back above this signal line. Okay. The blue line is the MACD. All right, we have a signal line here and starts curling. So I'm matching that up, these indicators, with the chart. Okay. So I think this is a potential good dollar cost averaging. But again, I don't like the candle structure at the location. Does that make sense? So do you see this candle? It's popping off this area, but do you see there's not a lot of bottom wicks here on that candle? There's a little bit of top wick there. That signals to me sometimes that this could just be a dead cat bounce. And then the following candles could look like this, and we go down further. All right. So that means that this is buy zone 1 for dollar cost averaging. And for those of you that want to enter swing calls or call options, I would go into your daily chart and make sure that it is staying above that daily 20, at least for right now. Okay. So you can trade it breaking the previous day highs. Okay. And if you're a believer in leaps, at least for right now, do your thing. Just keep your stop loss below that 135, in my opinion. Okay. I think it's good for swing calls. I think it's good to watch right now. But that daily 20 right there is kind of a last potential line, because if we fail back underneath that, then that's just simply a bear flag. Okay. And we're coming back lower like that. Okay. But this is a positive because it's in a good area of opportunity, in my opinion. Okay. It's also got earnings this week. Okay. So we've seen what's been happening with the tech earnings and anything in dealing with AI, anything software related. It's been having good earnings, but absolutely selling off. Okay. So Oracle could have the same sentiment, or they could have a pop up here. So please keep your top watch on Oracle and decide what you want to do. Not financial advice here on the channel, but I think it's in a good buy zone for buy zone one. Dollar cost averaging here. Be careful on options, on just assuming that it's just going to go higher on earnings. Okay, just my opinion there. All right. Check the chat. AMD is about to break monthly low, the 200, 190 with a huge gap below. Exactly. All right. Because I usually start off with our weekly stuff, Brother B. I just want to kind of give folks that come on here for a bigger view picture of maybe, hey, like, okay, what are some opportunities if we do correct even more? I think Oracle is pretty decent. I've mentioned this on a different video recently. I think it was a couple videos ago, the software space. Okay. Software space, I think it has a lot of opportunity for a recovery. And I think it's in a good buy zone / dollar cost averaging zone / short swing call options potentially, if you can get a good entry on them. This is the IGV, or the tech software sector ETF. Okay. So if you're into ETFs or just buying sectors, kind of like the semiconductor sector, so on and so forth, tech, NASDAQ. But if you want to look at the software more specifically, IGV, I think was a great opportunity here, coming extremely strong off of that weekly 200, and then also reclaiming the daily 200, the daily 20 moving average pretty strong there and getting away from it. Okay. So if it does pull back and hold, then we've got something looking like that. So I think that is an opportunistic time. Go look at the holdings of IGV and it will give you a better idea, but just some off the top. Microsoft. Okay. Oracle's in there. CRM is in there. I would even include Shopify, but all these charts look roughly the same. All right. Some are bigger than others. So you may like, I don't want to. There are people here on the channel. It's like, I don't have the free cash flow to be able to buy 100 shares of CRM. Right. But if you are big money, I think you could buy some hefty amount of shares of some of these software stocks. Okay. But a lot of these are looking really good for potential holding up strong as the market corrects, because they've already been beaten down. All right. We've got some gaps above. They're all looking the same above that daily 20. Look at those. Look at CRM holding up very nicely there. If it holds up daily 20, which is the 190 to 200 area, it's most likely going to 210, most likely going to 220. Okay. Very similar to when we literally put Palantir in the chat, and I'll talk about Palantir the day before, after it started curling up. Look at what Palantir did. Here's a perfect example. When it gets above the daily 20 and it starts breaking structure, look at what Palantir did when it got above 138. Went straight to 162. But Palantir is back into the moving average stack, so most likely it will pull back into the daily 20 and try to hold there, and we get some type of trend change like this, in my opinion, if it holds. Okay. So those are your opportunities, in my opinion. I'll just throw out some side watches just because people are always interested in them. I think SoFi is still a good opportunity. I've got my different buy zones on it. It typically will follow Bitcoin. So if Bitcoin moves down further, I said that SoFi buy zone 3 is down into the $12, $13 mark. If this does rotate lower, but it hit buy zone 2 right around $15 to $16. So if you're interested or believe in SoFi, there it is. Hood, anything associated with Bitcoin in any type of way, you can see that Hood is in an interesting space. It almost mimics the Bitcoin chart. Okay. And if we're talking about Bitcoin and crypto going lower, right, and Bitcoin falling down into potentially the $50,000 mark, then what do you think that chart will look like on Hood? We'll probably pull it down into the 50s. Okay. Look at zone 1 right here at 73. Great zone, but also look at the candle structure at the location that it is. Does that, for anyone that's been learning, does that look like a candle that has a lot of heavy bottom buyers. It looks like still some selling there, at least for right now. Okay. Now, Netflix was a different story. Okay. Netflix was a different story because at the location, Netflix had a nice hammer candle off of this location. Do you see the type of candle that's on a weekly there for Netflix? Bottom wick there, very nice top bodied candle, very low top wick action, which had a follow through that got helped with news with this massive bullish weekly candle off of 75. Okay. So you can be in a location in a zone, but the structure of the price action in the candle does not match actually going higher. Does that make sense for everybody? Now, things can change with news or some type of upgrade or some type of partnership or whatever. Like, it happens all the time. But the candles will give you a little bit better idea to say, man, that's a pretty nice candle there on that weekly. So maybe the next week I need to pay attention. And we were talking about, I think I was talking about the community for a while, grab up some Netflix, grab up some NFLU, grab up some Netflix, grab up some shares, right? As far as call options, you could enter some if you'd like to, but I think shares are really, really good right here. Okay. Now, the interesting thing about Netflix is that if we go to the moving average stacks here, okay, it's got some gaps back down below. So you might not have missed out just yet on Netflix if it fails back underneath that $97 mark, which would start pulling it back. We've seen it before. Does not mean it's no one higher, pulling it back to fill some of those gaps. So you still could have another opportunity with Netflix, but since it got such a strong bounce and freedom up from that Warner Brothers deal, you might want to keep an eye on it and set your alerts. Maybe set an alert, say, hey, notify me if Netflix pulls back underneath 95. That will kind of give you a hint that, hey, it's got potentially back in the 80s, potentially back in the mid 70s, and it gives people another opportunity there instead of just V bottom bouncing. But if it keeps riding and we reclaiming above 100 and then we go back up here, where are we going? You already know that next moving average stack there. And then before you know it, all the way back up to all-time highs. Okay. So it's kind of at a pivotal point to say, man, please, 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 please give me a chance. Give me a chance. Pull back a little bit more, one more time before you take off. All right. So just wanted to shout that out there. Shopify. Very interesting chart here. It looks like a cup and a handle formation to me. There's the cupping formation. There's kind of the handle. And it's retesting that 119, 120 area, got as low. But as always, if the market gets hit even harder, if software gets hit even more, if AI starts stepping in, I'm just watching the moving average stacks. That's all I'm watching. So as long as it's above the daily 20, hold. If it's above weekly moving averages, hold. Okay, cool. Looks good. Okay. All right. Let's get to our core here. So those were some opportunities. If you have any more, put it down below. And you see that I'm still just talking about, at this point, proven blue chip companies that have been around for a while, that have free cash flow. I'm not mentioning many speculative stocks in a period of uncertainty right now. Just not. So all the AI stocks that everyone was talking about for 2025 that ran, I'll revisit those when the time settles back in. But if we're headed into some type of situation, right, I'm not really interested in putting money into those. Just point blank, personally. I think everyone's looking for that next big pop. And during these times, it's just like, keep this stuff simple, in my opinion. All right, let me check the chat. Yeah, Oracle is fire. And then what would that mean for NQ? Mean for NQ as far as which part? Like if we had a corrective move, if that, what do you mean? Which part meaning for NQ? I just want to make sure really quick. So yeah, if tech pulls back or if we have a correctional period, I mean, NQ / the NASDAQ / QQQ is going down. right? It's going down. So here's NQ on a bigger, okay? At this point with this volatility, I'm looking at NQ more specifically, moving roughly 300 to 500 points and also psychological levels. So where is NQ now? It's close to this $2,400, 24,000. Okay. So what I would watch for NQ is 24,000. On QQQ, if we look at the same chart, that'll be roughly around this 586 mark, right? 586 and some change. Okay. So that would be NQ 24,000. So if we get underneath those big psychological levels or hold underneath those psychological or hold above those psychological levels, then we can bounce back up. Okay. So that is really big right there. 24,000. If we push down into that even lower and it seems like we're going lower and we hold 24,000, we can rip back up maybe even to 25,000. Right. So $1,000 point move, 1,000 tick move on NQ back to the upside potentially. Right. But big mark on NQ that I'm probably watching more specifically are the 700s, or right at like 620. I like the 600s. That'd be that gap fill right there. Can you see the daily moving averages right there? That 352. Okay, so that's roughly around that 100-point move. So that 352, if you trade NQ or you're looking at NQ, 352, down to 24,000, or it reclaims 352, gets back above that moving average to the 400s, and then probably moves back into that 600s mark. Volatility is so wide on NQ. I personally, that's why I trade MES or ES. So ES is literally sitting on top of that 6620 level. And then 6600 is right underneath it, which is that 668 on SPY, like I was telling you about. So that's very, very key to hold. If we start breaking underneath 6600, yeah, on the futures, then we're probably coming down lower into those lower end the ranges, back down in here to 65. I mean, at this point, ES is moving roughly around that what's that? 6,600 to 6,500, roughly 50-point moves. Right. So 50-point moves would be 6,650 and then 6,600. Does that help a little bit? Yep, that's what I was asking as you were talking about software stocks. Yes, yeah, exactly. So software stocks obviously are just a portion, right? Because it includes Microsoft, Oracle, so on and so forth. But you still got to think about the big Magnificent Seven, the big players. I mean, Apple and Google haven't even pulled back, right? So that shows strength. But if Apple starts pulling back a little bit more, then that's going to bring QQQ down, to tech sector down. Google, if it actually starts pulling back, right? It's trying to. It's underneath that daily 100, right? Which is at 305, 306. If that actually starts continuing, then that's probably where software will also follow suit, because the entire market will be in sync. Does that help out a little bit? So I'm kind of compartmentalizing it by sectors, right? And like, is everything in unison, or some things kind of just out of whack right now? In my opinion, some things are a little bit out of whack. I mean, Google in the after hours is at 291, so it's gapped down about $8 already. Oh, wow. Oh, my goodness. Okay, that just updated for me. I'm sorry, guys. We're already at SPY 661. Okay. It's about to be one of those Black Monday situations. Okay. Oh, wow. All right. Okay. Huh. We're already at 240 on IWM. Okay, then. That's what we're doing? That's what we're doing tonight? All right. Okay, that just showed up on my screen. Okay, you look at it now. All right. Well, everything that we said that was going to happen has already happened, folks. Okay, so maybe it's that time. Maybe it's that time to unleash the cash pretty soon. Maybe it's that time to start looking at some bigger swing trades. Maybe it's that time to say we might be getting that correction. Y'all remember last April? It might be that time. When times like this happen, it's like I kind of just step out of the way, to be honest with you. I kind of just let it fall. Yeah, I mean, you can try to chase this, but this is one of those where it's so volatile, it could rip back up. I mean, I've seen situations where this is the bottom and just rips all the way back up. I mean, you could try it tomorrow. We'll see about in the chat, or it'll do it overnight. But yeah, anyone in futures, I mean, you can maybe scalp a little bit of buys off these lows, but yeah, wow. Okay, let me scan through these, show these charts. Where's NVIDIA? 174. Okay, so NVIDIA really, it hasn't broken new lows. I mean, if it breaks 173, we're going lower. Okay, where does Netflix, like we just talked about? Okay, starting to curl over. Where's Microsoft? Just watch the daily 20. Where's Palantir back to? Back to 150. I think Palantir can pull back into the 145s. We'll just watch 150. AMD. Okay, maybe you just watch AMD underneath this. I don't like the after hours. I think that's kind of, I'd watch AMD underneath that 187 level. Okay, 187 tomorrow, or just watch previous day low. We'll talk about it in the morning in our pre-market analysis. So I'll mark previous day low there. I'll do all the markings. Wow. Okay. Where's a hood? Okay. Gapping down. We'll just watch this maybe 3-3. So that was Monday's or Tuesday's low. 72. Watch that. Coinbase filling that gap already. All right. So this shouldn't shock anyone that has been following this channel for a while, that's been locked in with us for a minute. This should not shock anyone. Everything that we have said has pretty much happened. Can y'all give me a 6 in the chat? Everybody get a 6 in the chat. If you've been sticking with me and rocking with me for a minute, everything we just said literally just happened within minutes. That should make us feel all good that we were on the right side of the read. Now, it does not make me feel good that I got to wake up in the morning and analyze what I'm going to do, but but our whole wild, right? Absolutely wild. If that doesn't help you trust this channel a little bit more on our analysis, I don't know what will. Right? The money making part is fun, but reading the market, in my opinion, and the sentiment of the market and sticking with that, saying, hey, guys, I think this is the top. I really do think this is the top. I think this is a time where you need to be careful on those swing calls. I think it's a time where we need to just wait for those swing call options. I think you can scalp, but please, because you will wake up in the morning, you're like, dang, my calls are getting crushed. Right? So, yeah. I'll answer any questions here for anybody, and I'll go into anything that anyone else wants to learn, understand, know. But a lot of exciting things going on the back end over here. Megan, if you're free after this, I'm open. So let me know. Got a little phone call meeting after this, but yeah, I'm excited. I've gotten a newfound energy to talk about other things that I want to talk about, and I'm creating that behind the scenes. So we'll talk about that. This is strictly for trading, stock market, all those good things. But for those of you that know me, I do a lot more than that. So yeah, I've had to separate it now. Hey, what is this dude talking about? Stick here long enough, you'll learn more about what we got going on. All right. 666. Okay, cool. So in summary, I'm wrapping it up here for everybody. In summary, I'll put my face back up here, taking up your full screen. If I had to summarize everything that's going on in the markets right now, we have finally gotten a direction. Okay. Tomorrow, when you wake up in the morning, you can do one of two things. You can just sit and watch, right? If you're on your own, if you're not in a community or you're in another community, whatever you're doing, if you're on your own, you can sit and watch and see how it plays out. Okay. On a Monday like tomorrow is going to be extremely volatile, right? Kind of like the big news events that happened on Friday, right? Big news events happen, we drop, and then it just does something weird on Friday. Now, Brian, what if this is the bottom? Like, what could send this higher? Some things that are out of our control. CPI could be positive on Thursday. Jobs numbers could be good on Friday. We could have some type of news from Trump that just says, hey, we figured things out, so on and so forth, and then we ripped all the way back up, right? So each day is new. We'll keep updated about what's going on, but Dr. B got 50K in cash. What sequence buying the dip do you recommend? Tanking? Yeah. So knowing Ben and knowing that he is a big ETF guy, big picture guy, right? I like turning on the dollar cost averaging, depending on how much you're trying to deploy, Ben, because we're almost getting into that extreme fear. If I were to give you a big, because I know you're a big QQQ person, Ben, if I were to give you a big level, and I've been talking about this for how long, right, Ben? I think we all have in the community. We've been talking about this, and it's kind of hard to say because we've been consolidating for so long that everyone's like break out to new all-time highs, and I've been standing firm. I really think into the lower 500s. If I were to give a big mark, the lower 500s, but I would really look at this moving average here, which would be right around 570. Right? That would be like the first mark that I think personally you can maybe dive in a little bit heavier, because we never know. This could be the bottom and we rip right back up all the way to the highs. But if I were to mirror this from last April and March, we had a 25% corrective move, or in that case, bearish move. So if I measure this move from where we are now, which we're at 589, almost to the T that we called out earlier, 589. That's right around that. Let me pull it from here. Right around that 7%. 7%. So this helps everybody. So if someone's like, and I'll just put arbitrarily someone's, because I'm not giving Ben financial advice here on a public platform, arbitrarily someone has $50,000, okay? And they have $50,000 cash, and they're like, the first question is, do they want to deploy all of it, right? And I'm just going to speak specifically to QQQ because I've done this before with people as an example, okay? If we have 50,000, whoops, I'm sorry, I'm not even sharing my screen, I don't think. My big self is still on the, okay. If we have 50,000, okay, and give me a like, or maybe give me a 7 in the chat if you want to hear this quick little explanation. Is that okay with everybody? Before we leave, I think I've summarized everything, but I think this is valuable here. If someone has a big lump sum of change, and that could be 1,000 for you, that could be 5,000, it doesn't matter. Someone's like, I have this amount, I want to kind of put it in the stock market. How should I go about it? Right? 50,000. And this person wants to deploy all of that into QQQ. I like to separate that personally into 3 different buckets. That's why you see me say zone 1, zone 2, and zone 3. Now, you'll have these professional financial advisors. You'll have someone that, goes very technical into all this, and I definitely could. And that's why some people have said I should probably get my series and all those things so I can do financial analysis for folks and take over portfolios and all those kind of things. But zone 1, it depends on how you have to analyze the risk tolerance of someone. Okay. So if this were just be simplified into this zone 1, if someone has a very high risk tolerance, and I'll change these numbers, then they may want to go a little bit more risk on or a little bit heavier into each zone. And they say, I want to dump a quarter in first. All right. So they want to dump a quarter in. What's 50,000 times 25%, 12 and a half. Right. And 12 and a half, they would dump in at the 7 to 8% mark. Corrective move. Now that's scary for some folks because they're like, well, what if it drops lower? Well, that person's already prepared for a potential 10, well, ideally 10 to just say 15 and maybe closer to that 15%. Maybe we break it in half and they're like, I'd rather be 10 to 12. Okay. And they dump another quarter. Okay. And then someone says in zone 3, which could be a full corrective move, which is ideally close to that 20% range. This is when that person turns on the jets a little bit more and says, okay, cool. I'd rather dump at this point, probably more than that, roughly around that 20 potential. What's that? We're already at 25,000. We're at half. Okay. Let's go. Just say 15K. Okay. And then they would keep cash reserves potentially on the side to say, maybe I can DCA at some point with the rest of the cash reserves, or I can start loading up heavier at this bottom once I gain more clarification that I like that bottom. This is just one example. Now, someone might come on here and say, well, that's not the right way to do it, so on and so forth. But this, to me, for someone that is coming on here that says, I have 5,000 and how would I go about deploying that? You would probably simplify it into the corrective moves on quality ETFs or quality companies, because what happens sometimes is that people will just say this. This is the easy route. This is someone, in my opinion, that maybe doesn't want to look at the charts, doesn't want to analyze specific buy zones. They just want to turn on something and say, hey, you would just start turning on DCAing at 10%. And you can do both. So 8 to 10% correction. And in this case, this person, not Ben, right? This person with 50K would just say, I'm going to put 50K into QQQ and just turn on recurring buy. Now, what does that mean? That person could set it at weekly. They could set it at daily. They could set it at monthly. But typically when you're having a corrective move or you're having a downturn like this, you want to accelerate, in my opinion, you want to accelerate those into potentially dailies, right? Buying it daily at that point versus maybe weekly, right? I know a community member of ours that has now turned it on daily for one of his favorite stocks because it's got into an aggressive area. So you can switch that in your brokerage and switch it to, hey, increase this amount I'm buying per daily. Increase this amount I'm buying per monthly or weekly. And then there's some people that like to buy heavier in zones, and you can deploy both different strategies, just my opinion. Can I get a 7 in the chat? Again, does that help everybody kind of get an idea? Because we were all taught, I'm not sure about you, but we were all taught. And if you ask anybody, they'll just make it seem so simple. Like just buy the dip. Well, you don't know how much that person has. You don't know how much they're trying to deploy. You don't know if they have a high risk tolerance or not. You don't know if that person is, wanting to make money now, if they have a 5-year runway, 3-year runway. They may need to get more aggressive. They may want to get more aggressive, right? So you have to assess that within yourself to say, how aggressive do I want to get on something that I really like? I think you can get aggressive on blue chip companies. I think you can get aggressive on big ETFs such as SPY, QQQ, VOO, VTI, right? You can get aggressive on those types of things because they're inclusive of quality companies. But getting aggressive on companies just because they're on a dip, right? Like maybe someone's getting very aggressive. Let's pull up one on PayPal, right? Maybe someone's getting aggressive on PayPal, right? At 38.40. Well, you might have to, assess where your aggression, like where's your target on this? Because you can keep dumping money into PayPal. I think it's at a good risk to reward buy, right? But you also have to have a target of saying, okay, well, where am I taking PayPal to? Because it could sit down here at $40, $50, $60 for another 2 years, 3 years, 5 years, 6 years, 10 years, and it just never really recovers. Or I can say, hey, I'm willing to take the risk on $5,000, $10,000 in PayPal shares and or leaps, something like that, because it has a really good risk to reward, meaning it is down to roughly these kind of IPO entry levels here on the charts at $40. Well, I can look at this candle here and say, okay, I don't know if PayPal, and some people have strong opinions, will return to 300. But what I can do is say, well, PayPal, I think, is good enough of a company. I think it has still a place in the marketplace position. I think it still has really good earnings. So maybe I will take PayPal from $40 and have a target of doubling up, right? So now you have a plan for your PayPal instead of some people that just keep dumping money into a stock because it's just on a dip. That's a better way. And maybe I'd be speaking to the peanut gallery here, but in my opinion, that's a better way of saying QQQ versus a potential PayPal that's on a dip, but still could have a double up opportunity quicker. So 50,000 into quality and 5 to 10 for a double up into something that's on a dip, but you don't know if you want to hold it long term. Does that make sense for everybody? Now I know, and I'm going to speak to those that, and I like to speak abundantly, but I also want this channel to be realistic. Not everyone has 30, 50,000 or 100,000 to deploy in cash. Like I just want, that is the goal for everyone. But if I'm speaking to someone here, I never want to deter anyone that's like, dang, like I'm looking to trade because I need to make some money. I need to, get some extra cash flow to be able to put into long term. I'm speaking to you, right? You can still trade. You can still get those $100 a day. Build up your trading account, right? Continue to get more income. Continue to develop another side business or increasing your job or whatever that is. Right. And you can nibble and work your way up towards those 100 shares, 50 shares, 25 shares, whatever it is. All right. And we talked about that in our community recently. You can also look at leveraged ETFs carefully, right? Carefully. Such as, for example, just say, and Ben, I'm going to mention you on this because we know how volatile and drastic a leveraged ETF can be. So, for example, just say we mentioned a lot in our community inside of the Discord, AMD. Okay. So when we go into a corrective move, like SPY corrects 10, 20, 30, 50%. Okay. A lot of the companies such as AMD, remember the last corrective move when we were in extreme fear, AMD was at roughly underneath $100. Okay. But AMDL, or the leveraged version of AMD, number one, it's a quality company. Second, we're in a correction / bear market. I can trust that this leveraged ETF will recover. So this AMDL was what? $3. And it went to what? 25. So that's how someone can participate in share or equity buying if they also don't have the ability to buy 100 shares of AMD at $100, right? But you can get 100 shares or 1,000 shares at $3, right? What would 1,000 shares at $3 do? That's $3,000. And it went to what? $25. 3,000 to 25,000, right? So for those in Leverage University, we've talked about this before in our Discord. I don't want to discount anything from anyone who's not in there, but we mentioned this on the side that when people ask about leaps, right? People don't talk about leveraged ETFs when you're working. You don't have theta decay working against you. You don't have a timeline. So you could do the same thing with a leap on AMD as you can with AMDL or leverage shares on corrective moves. All right. We had one on SOXL last year. SOXL tracks the semiconductor sector. So when everyone was like, buy the dip on NVIDIA, buy the dip on NVIDIA, buy the dip on NVIDIA, but you can also buy the sector ETF. It was at $7 and went to $72. So what would have 1,000 shares done at $7? $7,000 to what? $72,000 with no theta decay. I'll just leave that right there. All right, we're going to end off that. Could have a short squeeze like GME. Yeah, lots of chatter on HIMS. Yeah, I think HIMS is still a great value. It's kind of like PayPal. Oh, yep, it's at $18 in the after-hour session, so it's up here close to 20. Had some news. Novo Nordisk. Yep, I knew it was going to do something like that. Novo Nordisk GLP-1 partnership resolution. So, yeah. There we go. So HIMS might be back. Might be an opportunity. HIMS shares, potentially some HIMS big swing call positions. The only concern is just their earnings was not the best. So I like HIMS at this $12 to $15 range. Underneath 20, I think it's a good risk to reward. I think it could have a double up easily, Ben. If it gets back above $21, I think it's going to start moving into the 30s. So, yeah, I keep an eye on HIMS this week. I keep an eye on everything, potentially. It could rebound. We might be at the lows in the morning before we know it. Y'all remember what this looks like last time we had Black Monday? It's like, man, it sells off. Everyone gets so short. Everyone starts getting entered into some put options. The next thing you know, we rip back up. All right, so any final last questions, thoughts, perspectives for me? Thank y'all so much for tuning in this evening. And yeah, make sure if you're not, last day to get that rate for the boot camp at that price if you are interested. All right, there we go. The Edge Bootcamp, if you have any questions for it before you join or anything like that, or if you have a referral, you have anyone else interested, anything like that, this is not just for beginners. This is anyone that still is on the fence, like, hey, I've heard you all these things. I still need clarity. Any of my boot camps I'm typically giving overvalued. So I'll just leave it at that. There will be recordings as well. So there is that. Here are the 2 days. Saturday, market foundations, understanding market structure, trend behavior, identifying high probability trading environments, execution, trade management, strike price, expiration timing, structuring trades, setup. So if there's any simple questions, like I don't even know how to set up my charts right. How do you get into trades so quickly, right? Things like that. How do you set stop losses? Like simple stuff like that. Protecting capital, controlling risk. We're talking about psychology as well. I think a lot of these things are naturally talked about, but people don't have the close proximity to be able to do that. Day 2, we're going to be talking about futures. So in this market, a lot of people be interested in futures lately, how to trade them, how to set things up, execution frameworks, live market examples, which we'll probably be able to trade a little bit of futures next Sunday. So yeah, we can trade a little bit of futures together. All right. Cool. If there's any questions before, just make sure that you are locking in that price before the end of tonight. All right. Into the morning. You'll see if you click on that link, if you decide tomorrow, it will change. All right. Appreciate y'all. Thank you so much. Until next time. Could be dead cat bounce accent. Yeah, I agree. Anytime there's news like that, dead cat out, man, a lot of people bought a dip last week with leverage and now we back down. I'm telling you, Ben. I'm telling you. I'm telling you, man. Man, y'all keep me on here too long. I've been told to protect my boundaries, okay? I say that to say that I think that there's so much optimism on the overall market when there's red. Just tell people to buy the dip. But there's also a responsibility when you're saying that in a public space that some people don't have the reserves to buy more. So if you don't show people the possibility of lower and get them in the mind frame that, as you know, Ben, we've been through it. And for those of you that know, you've been through a 2022, for those who remember '08, for those who remember last year during this time, bottoms don't typically come in immediately, right? They start to develop lower highs, and trend direction starts to change. Right. So what I would rather do is tell people the truth. It's like, man, this dude, Dr. B, keeps telling us it's going down, but I don't see it going down. And then when it finally goes down, I would rather feel better saying I told people the truth. That's just on my heart. Right. So it doesn't shock anyone on this channel. It's like, yeah, he's been telling us it's going down lower. Yeah, he did say that. Like, but you may not have believed it in the time because there's these green days that just go so crazy. Right. So if this was not a day or an evening to showcase that, I don't know what it is, but I'm just so grateful for everyone to giving up their time and listening in and wanting to learn from me, and not just me, from our community members as well. All right. Talk to y'all later. Peace, love, and blessings. If you got anything for me, shoot us in the DMs here or over on the WAP platform, or if you have your link up ready to go for that boot camp, make sure you're going to lock that in tonight. All right. Excited to touch base with y'all, and I'll be throwing a bonus in for anyone that signs up early, which is Sherry. I'll be talking to you one-on-one. I'll be giving a private call as well to give strategy to anyone that joins early. All right. There's that little